Kvale, and this is our Q2 newsletter. And I know what you're thinking. Where is he getting these red shirts? Well, the one from the other day was a running shirt, and this is actually a golfing shirt. But there is a reason for this, so hold tight. I will eventually get to it. But again, I digress. This is our Q2 newsletter, and it is jammed full. I'm going to try. First, let me get myself out of the way, but I'm going to try and go over this as much as possible. And this stuff is changing. So the CARES Act, which is the stimulus act that was put into place to help people that were displaced by the coronavirus, is huge. It's almost 1,000 pages, and we have been doing everything we can to get as educated on it as possible. But at this time, it's a week and a couple of days old, and so there's still a lot of unknowns, and I put this I completely threw my other newsletter away and went into action on this. So some of this is going to be updated. Some of it already has been updated, but I wanted to go over the basic points. And so here are the things. If you're a business owner, if you're a small business owner, a self-employed business owner, or if you've been laid off, listen up, because these are the things that you need to know. Again, take this with a little bit of knowing that it's going to move. Move as in different things are going to come out. The Treasury Department is already updating, and they've promised us that they're going to update within the next 7 days, more information. But this is all we've got right now, and I'm trying to get it out to everybody. And also, if anybody wants to share this video with someone that they think may need it or may be affected, please do. I took it upon myself to truly try and get this out to as many people as possible, as fast, so that everybody can have a chance to understand this and see if it applies. All right, so I'm going to go to the first. Basically, I'm just talking right now about the CARES Act, and there'll be one other small market-related thing that we're going to talk about. We are supposed to get a letter stating where we are going to send. Let me back up. We all have a recovery rebate. Those of you that are in listen-only mode, keep your hands on the wheel. There is a recovery rebate that is part of the CARES Act, and it's going out to about 90% of the population. There's some phase-outs. The most important thing is to make sure that the IRS has your address correctly. If the IRS does not have your address correctly, then you need to fill out Form 8822. They're going to send out a letter if you get any, and where they're going to send it and how they're going to send it, I am told. I'm not sure about that, but I am told. Those of you that are listening, I'm on page 2 of the newsletter, and I'm going to scroll down to the next page. There is this one graph from one of the stately guys in our industry that is at the bottom of page 2 is a summary. I apologize, it's a little hard to read. May have to get your readers out to do it, but it's a summary of everything. But I go into great detail in each one of these. All right, so you're going to get if your address has changed since your last tax return, then you need to file Form 8822 to get that updated, and that is there's a copy of it on the last page of this newsletter. Okay, there's one other planning tip that I need to let you know about. If your income was higher in 2019 than 2018 and you are close to being phased out, hold off. Don't file your income tax return. Wait. I'm now scrolling down to the bottom of page 3, and the reason that I say wait is because if you're going to phase out and you file your 2019 tax return and they pick up on that, then you may get less money than you would otherwise, which also brings us to another point that we have the ability now to, I'm looking at the top of middle to top of page 3 for those of you that are listening, and we've had our taxes pushed out to July 15th. Most of us had, and that gives you ample time to not file your taxes and still get your rebate. All right. This has changed a little bit since I wrote. I'm on page, what page am I on now? I'm on page 4 now. The pandemic unemployment insurance benefit for the self-employed. Basically, using Texas, which is my best visual, as a guide. The Texas Unemployment Association is in charge of this, and they are so backed up that there's no way that they're going to get to these in any time soon. And the reason being, actually, I'm gonna roll on down to where that is at the bottom of page 4. The reason is that there's so many people that have been laid off. There are a lot of people in line. So I'm going to touch on a slightly different benefit for self-employed people. If you were employed in an organization and you were laid off, then you get regular unemployment, and that's what's being pushed in front of the pandemic insurance. Okay. Retirement accounts. We have a one-time ability to make a distribution out of our IRA without penalty, and if we get the money back in there within 3 years, you don't have to pay taxes on it. Required minimum distribution for those of age 72 or over, or those that are age 70 and a half that already got into the system. You do not have to take your required minimum distribution this year. Planning tip: just because you don't have to take it doesn't mean that if we need the income, or if your assets are such that you have heavy in your IRA, it's probably still better to go ahead and take it to maximize your tax bracket. One question that I've been repeatedly asked, and that is, if I don't take my RMD this year, do I have to take 2 next year? And the answer is no. There's a small, moving to the bottom, this is small, I'm moving to the bottom of page 5. There's a small one-time off charitable deductions, $300, and it's only for folks that do not itemize. In the realm of things, a very small benefit, but I wanted to bring it up anyway. Okay. Moving on, student loans are interest, no payments and interest are pushed back to September 30th. Now, I'm going to get to what has changed, what has just recently changed, and this is what's called the PPP program. When I wrote this, it was understood that it was only for businesses. It is now, as of this Friday, April 10th, will be available for sole proprietors as well. And that's what I wanted to bring up. It's important. I'm actually going to have a post on that. Those of you that are listening see that an email just popped in, or watching see that an email just popped in. I'm not going to stop this. There's too much going on here. It's detailed, but basically the PPP plan is set up to get money into business owners and now self-employed individuals, and it gives them 2.5 times their average monthly payroll for people making less than $100,000 last year. Okay, so you take your averages for 2019, and you get 2.5 times that. And I'm not going to go into all the uses, but basically they want you to use that for certain things, such as salaries, rent, and again, it's for folks that are $100,000. It's the first $100,000 that accounts. Anything above $100,000 doesn't go into this average. We were told, the good news and the bad news, we were told that we were going to get this to people really quick, and as of right now, there's a bottleneck. I've got my hands out to about 10 or 15 people, and no one has gotten their money. Granted, it's only been a day. Actually, it's been 3 days and counting the weekend, but no one has gotten their money. It does look like it's getting bogged down a little bit. However, as I mentioned before, the pandemic insurance that's for the unemployed individual is really backed up. They're not even to that. So if you're a solo employee, you would probably be better off to look at the PPP plan. Oh, the most important part about this that I didn't mention, I'm trying to go a little fast, is if you take this plan and you use it for the appropriate uses, at this time there is no taxes. It's forgiven and you don't have to pay any taxes on it. That's what we know at this time. That could change in the future. They're going to know who took it, so there could be possibility of a higher tax bracket in the future. Here's the change of address form. I am now on page 6, and I want to do one thing here, one last thing, because I know this is getting long. I'm on page 7. This is the largest bond fund in the world, and it's a Vanguard bond fund. It is a true mutual fund. It's not an ETF. It lost, right as all this started, about 4 to 5% of value. It didn't lose it. It went down. That's basically because people rushed out the door and sold their bonds because the capital markets went down so quickly. This will correct itself if history rings true, and it will correct itself in a better fashion. Those of you that are watching, this is right where when everything, the proverbial you know what hit the you know what, and the capital market started dropping. And this is remind you, this is a bond fund. Bond funds don't typically do this, which is dropping this percentage, but it's already on the back, and we would expect it to continue and even gain from where it was because rates are lower, and that pushes bonds higher. We'll talk about getting the income from them at a later time. Okay, I covered a lot. The one thing that I would do is please share this with anybody that you might know that would find it interesting or useful. There's no proprietary information with regards to this, and I'm trying to help as many people as possible. So that's what Almost Live video does for you. The phone's ringing. Thank you, and have a good day.